Been a while, but here's a very quick recap. I guess not recap, but plan or analysis for today. For the past couple of days, it's been a lot of sellings. I haven't updated my levels here, but what I'm watching closely here for Friday, September, would be this support here at lows. Probably this first one here. That will be also the previous or yesterday's low. I can put it on the daily label here. Now there's a strong resistance around this area, which also correspond to that little wick here. I like to also put it on the chart about right there. It doesn't have to be exact, but it will be a reminder for me to look at this area. Now I like to look at the 4 hour after that. Now this is a Nasdaq. I like to look at the Nasdaq. Tech has been a huge leader in the market because all the big companies are basic tech, and I like to think that the effect that the general market has on tech, well, tech usually feel it first before the rest of the market does. Now, this has been straight up a selling since we made a lower high. I mean, if we look at the daily time frame, ever since the beginning of the year, there's been a lot of selling, just putting lower highs and lower lows everywhere. So we have a lower high here, and then a channel building here. We can build the channel air and a lower band for this channel around here. Now this is a problem here where this current support, if we do break this support, now definitely we're going to go meet this lower time, this low here on this support around this area here. Now this is, I'd say, a one lifetime opportunity for investors or newcomers in the investing business or industry, because I do believe that this won't happen in the next 10 years. I don't want to predict the bottom, but what I can say right now is that there's definitely a lot of discount in the market. So I'm not saying it's a good time to buy for sure. If we are, and it looks like this daily candle here, we might see a slight bounce, but we have some economic issues today. So I was looking at the PCE numbers this morning when they came out. Now let's see that. I scrolled down too fast. All right, October. Oh, they updated. So the PCE index is basically the I forgot what it stands for, but the power consumption for the general public. If it's high, it means it's just more expensive for people to just buy stuff around, like food or just general index of lifestyle. So it came out slightly higher than expected, meaning things are getting expensive. So that makes sense. We had inflation coming up, with a few other things coming up today. The Chicago PMI, somewhat important. It will come 15 minutes after the market open, so about 30 minutes here. And so this could be a catalyst for the market to slightly bounce here. If we do bounce, the 11,600 area here will be a very strong area for NQ to look at. Okay, other than that, we'll be looking at the 20 EMA, the 50 EMA, and more importantly as well the 200. Now the 200 is very far, basically about 2,000 point up. I don't think, unless we see a bullish hammer on the daily forming here, there might be a chance to see a lower high on that higher band here. But other than that, we're in the middle of that channel. So kind of a critical point here. If we to break down, then we're going to go see 10,000 areas. Are we going to see sub 10,000? So far unlikely. Very hard to say. Though pre-COVID prices for NQ was at 9,000. Who's to say it's not going to go there? It's going to go there. We don't know. But what I can say right now is that it is at a very critical point. I am holding some contracts that I may look to cut on my personal account, but they are about a week expiration going to next month. Now let's see our weekly candle for the past 3 weeks, including this week. It's been a lot of selling pressure, but also we just came out of the July, August, having beautiful week, push up rally, selling for 3 weeks, a little bounce here 3 weeks ago, and then for the past month, so September is pretty much known to be the worst performing month of the year historically. So yeah, so that's what happened here, and it kind of checks out for the whole month. It's been pretty bad. Now so far this year, April has been the worst one. Mainly I think with everything that happened, Ukraine, global supply chain and whatnot. Now I try to not really focus on the news, but they are somehow important. Now for today's play, what will I be looking at? I'm still looking at this area here, the 11,400 area. Let me take my rectangle, if I can find them below here. So this is a point of control that hasn't been cleared yet. As far like yesterday, it tried to push up, but didn't straight up open. It was just straight up selling, and the whole day was just consolidation on that level here. Now we are going to open below this resistance, maybe looking to see if we can test overnight highs, and if so, I might be looking for something that looks like this, testing, and maybe breaking out to go test this for a clear uptrend. If so, then we'll be putting on the short-term time frame a higher high, then we have a higher low here, and so on. Okay, this is a scenario that can happen. Now we can also have a rejection here. Okay, maybe a double top, something like this. Okay, it doesn't have to be perfect like this, but I'm expecting to either test this second resistance or even the first daily resistance here, which would be, I think, was it today or yesterday? About 3 days ago, so at the beginning of the week. So yeah, I'd want to first see if we can clear this resistance, so 11,250 for the whole tech sector to move up. Now we're kind of, I wouldn't say chopping around because it's a wide range. Currently at 11,200. Been bouncing off more or less, give or take 100 points from 11,500. So some say it can shop around, but it's pretty wide range. There's a lot to take here. Those candles are pretty big, very volatile. I'm looking to see if we can have a bounce rally, otherwise if we go below 11,150, and if we break that 11,100, then yeah, I will be looking for shorts. If we can clear this blue resistance, I will be looking for long. So that would be looking for something like this. If we can break this, so this sector here, I'll be looking at, taking maybe a long here. We can have a stop here and start trimming here. that'll be somewhat a 1-to-1 ratio, but eventually I want a 2-to-1 ratio, taking this area here as a profit area. Okay, shorts will be something like this, and move it out. The stop loss will be that candle, but also this candle here. Now shorts can be a bit tricky because we have strong supports below, probably around this area here or even further below here. So it's tighter short, tighter stop here. My bias right now, I'm kind of looking for a relief rally. It's Friday. I want to see if it's what Friday is it? So it's not okay. The last Friday of the month. So yeah, last day of the month. So maybe a relief rally happening. Maybe not. Either way, that's what I'm expecting right now. Okay, what does that mean for the rest? Well, let me take that out. I'm gonna take those out because I cannot, pollute my space here. I already have a lot of happening. Apple being a big leader in the market, meaning, well, if Apple goes down, then there's a lot of chance that the whole market will follow it. It's one of the biggest company out there. Pretty clear and aggressive selling here, breaking the channel. More specifically, what I'm talking about is this small channel here. So yeah, it broke the trend line, the downtrend line. So pretty critical area to watch. On a daily for Apple, I wouldn't want to play Apple on the daily. What I've been looking to play would be the indexes. I think right now they are the safest. As far as option goes, for me, the indexes would be the safest plays. Because I think they have somewhat of a clear supports and resistance areas. I wouldn't want to play the expiration, especially on Friday. Probably playing next week expiration. Most likely not Monday, but maybe like Wednesday or Friday next week expiration. So that'll be October. So I showed NQ plan. So basically QQQ. Let me go over SPY here. So yeah, from yesterday we still have a gap to fill on the upside. I'm not really looking for that to happen, but what I can see, so right now will be a resistance, which is a pre-market high, but also from yesterday that's pre-market low. So that is a pretty clear play here for me. Why? Because if you do break that, then I'll be looking to take a long, to take a profit where? What at the opening here. Okay, that will probably be, most likely be a trim, not a full take profit, but that's also a full $2 move. So maybe take like a half off if it breaks out from pre-market high, taking half profit with a stop loss, raising stop loss in profit, so that way it's a free stress-free trade. Now here the lows are pretty scary in my opinion. If we go sub or below 361, most likely taking shorts. But yesterday, let's look at it, see what happened. It broke below 361, but it was near closing, so on the second half of the day, and we also moved $5. Now if it happens this morning in open, if we go sub 361, then yeah, most likely taking shorts here. A target will be, well, let's look at some of the daily candles, and we have to look for 358 will be the first one to come into play. Can SPY meet 358? I think it can, most likely. I think it can if it goes below 361, meaning if a full 5-minute candle closes below, I can totally see SPY going to 358, and that's about it's about $4 or $5 move right there, which is totally doable on SPY. I mean, if we look at everyday range for SPY moves about $5 to $6. Now it can move more depending on what reports or numbers comes out, but this can definitely happen. I wouldn't want to be very biased on this market right now because anything can happen. 2 days ago we saw a huge rally, then in the following day lots of selling. Now today, are we going to follow through the selling from yesterday? Maybe. If we do break below 361, then yes, they will confirm my bias that we are following more selling on towards the end. Now if we can see more strength breaking above all the EMAs, VWAP, and also the 200 EMAs, trying to go on meet 364, 365. If we can break above, meaning if we can have a full 5-minute candle closing above that 364 pre-market close, maybe not the week, but the close here, that will be a 364, 70, 76. Then I'll be looking for longs, taking profit at 367. Okay, a stop loss for that if it doesn't go through. A stop loss will be a tight stop loss that'll be around 364.4, or even a wider, that'll be just a full 364, maybe on the dots. Yeah, that'll be maybe on the dot. So like we're looking for a $2-3 move with a $1 stop loss. I wouldn't think it's really a bad ratio, considering that it's not looking for a 0-day expiration contract. Again, that'll be for next week. They might be inflated, they might be expensive, so to size up appropriately, I would probably be looking for sizing down my position. If you have the account for that, SPX will be a great area to play with. Why? Because we have also clear areas here with this high here, which pretty much corresponds to the 200 EMAs. So we can look for either a bounce here or a breakout. So either shorts or a breakout here can happen. This also could be very much be a consolidation for a move down. We can look at this just small trend line here, trend line, but small support here with different areas to look after, in my opinion. And so could look for a bounce or breakout here, still have a gap up to fill, but doesn't have to be filled today. Okay. Overall, I will be looking for not to play anything within that range, but I will play something outside of this range. Maybe some scalp for some potential bounces, but other than that, it is very much, at least in my opinion, a scalping strategy approach market. If we want to swing or hold positions long term, it's kind of hard lately because really anything is possible. I don't think anybody would have predicted the whole market to be that much down this year. We know things will be bad, but that bad, who's to stay ready with clear confidence? I think that's it for me this morning. I think I explained my plan pretty well so far. Again, stay away from 0-day date expiration.